This week, the measure officially qualified for the November ballot.
Here's the part that turns a billionaire's tax bill into your problem. A tax on net worth is different from a tax on income, and the difference is brutal. You can be worth $100 billion on paper and still be cash poor, because all of it is locked up in the stock of a company you built. To pay a 5% wealth tax, you'd have to sell that stock, dump shares, and pull capital out of the very business everyone relies on. And remember, it was retroactive to a single day, which lawyers said almost guarantees years of litigation. Now step into the shoes of a California family that can't move. You're a nurse, or a teacher, or you run a small business and your whole life is here. You can't relocate a fortune to Florida in an afternoon. When the handful of people who pay for an enormous share of the state's services pack up and leave, that bill does not vanish. It lands on the people who stayed, either as cut services or as higher taxes on everyone who couldn't flee. The cruelest twist, the people this tax was supposed to protect, the Medi-Cal patients and the public school kids, are exactly the ones whose funding is most exposed when the tax base walks away. Remember that number I told you was buried in California's budget? Here it is. California's personal income tax pays for nearly 70% of the state's entire general fund. And the top 1% of earners, roughly 15,000 tax returns in a state of 40 million people, cover close to half of it. Stop and sit with that. A group of people smaller than the crowd at a Lakers game funds almost a third of California's schools, its hospitals, its prisons, and its welfare programs. And it gets worse. The state's own legislative analyst, Gabe Petek, reported that California ran $125 billion in deficits over the last 4 years and warned the problem is structural, not just a bad year. The only reason this year's deficit looks small is that a roaring stock market handed the state a $42 billion windfall, the same volatile capital gains money that comes from the same handful of top earners. So the state papered over a structural hole with a temporary stock market sugar high and drained its rainy day reserves to do it with no recession in sight. California built a $300 billion government on the backs of 15,000 people, and just watch the richest of them buy a compound in Miami and leave. So what are the people in charge actually doing about it? Here's where it gets strange. Governor Gavin Newsom opposes this tax. He called it something that makes no sense, vowed to do whatever it took to protect the state's economy, and he pointed straight at Page and Brin leaving as proof he'd been right all along. His exact words, "This is my fear. It's just what I warned against. It's happening." Sit with that for a second. A progressive governor, a presumed 2028 presidential frontrunner, is now openly defending billionaires against his own party's signature Tax the Rich plan and admitting on the record that high taxes drive the wealthy out. This week, the measure officially qualified for the November ballot.
This week, the measure officially qualified for the November ballot.
The same Tax the Rich wave is rising across blue states, and so is the flight risk. If your state runs this playbook, your richest neighbors will make the same move. Here's the bottom line. You cannot build a $300 billion government on the backs of 15,000 people and then act shocked when the richest of them leaves. That's not a tax policy. That's a state betting its schools and its hospitals on a handful of stock portfolios that can walk out the door any morning they choose. And whether you live in California or not, this reaches you. When the tax base leaves, the bill always lands on whoever stayed behind. That's the part nobody campaigning on either side wants to say out loud. So I want to hear from you. Can a wealth tax actually work, or does it just hand your richest neighbors a reason to leave?